Good afternoon from the New York Stock Exchange. It's Wednesday, November 5th. I'm Caroline Woods coming to you from high above the trading floor. After a rough Tuesday, stocks are bouncing back today. The Dow, NASDAQ, and S&P 500 are all in the green, clawing back some of yesterday's losses. They're still negative for the week, but it's a start. What's driving the rebound? Well, a mix of tech and travel strength. On the tech side, Seagate, Micron, and Western Digital are topping the S&P 500 leaderboard. The Magnificent Seven are a bit mixed, but Alphabet, Tesla, Meta, and Nvidia are adding some momentum to the market. Palantir, on the other hand, continues to slip, down about 8% now this week, even after strong earnings. Still, it's up more than 140% so far this year, so some profit taking isn't surprising. Travel names are also getting a lift. United, Delta, Southwest, Marriott, and Carnival are all trending higher. Same story for consumer names like Lululemon and Starbucks, which have lagged the market this year, but they're finding their footing today. Holding things back a bit, Home Depot, Lowe's, Bank of America, and Domino's are all trading lower. We did get a dose of good economic news this morning. The ADP private payrolls report came in stronger than expected. Private companies added 42,000 jobs in October, reversing September's decline and nearly doubling expectations. Now, this report usually takes a backseat to the government jobs report that comes out monthly, but it's not going to because of the government shutdown. Speaking of which, today is day 36 of the government shutdown, making it the longest shutdown in U.S. history. Now, in terms of other stock stories I'm watching today, Pinterest shares are tumbling after their quarterly results failed to impress. Revenue did meet expectations, but profits fell short. Pinterest said that it faced some pockets of moderating ad spend in both the U.S. and Canada during the quarter due to larger U.S. retailers that face pressure on their margins from tariff-related issues. They expect these trends to continue with the addition of new tariffs that will impact the home furnishings category. Kava shares are also taking a hit after the Mediterranean fast casual chain trimmed its full-year guidance. It now sees sales at restaurants open at least a year to grow between 3% and 4%. That's down from its prior outlook of 4% to 6% growth. The chain pointed to younger consumers visiting its restaurants less frequently, specifically the 25 to 34-year-old customer. Chipotle said something similar recently, so that trend's catching attention. McDonald's, meanwhile, is higher despite missing on both earnings and revenue. The company painted a clear picture of a bifurcated consumer. Lower income diners are pulling back with traffic down double digits, but higher income consumers are still showing up, with traffic up nearly double digits this past quarter. McDonald's says it expects that split to last well into 2026. Rivian is one of today's biggest winners. The EV maker still isn't profitable, but losses were narrower than expected. The company reaffirmed its 2025 delivery forecast of 41,500 to 43,500 units and confirmed production of its new R2 midsize SUV that it's on track for early next year. Looking ahead to tomorrow, it's another busy earnings day. Expect to get a read on the travel sector with results from Airbnb. Warner Brothers, Discovery, DraftKings are also on tap. We'll also be digesting reports from Robinhood, AMC, Qualcomm, ARM, Elf Beauty, and Snap, which come out tonight after the bell. And don't forget, Tesla's annual shareholder meeting is tomorrow with all eyes on Elon Musk's potential $1 trillion pay package. That's all for now. I'll see you back here tomorrow from the New York Stock Exchange. I'm Caroline Woods.